start. Okay, follow the series till the end, everyone, because this series is very important and we cover important numericals, objective questions. Remember, numericals and objective questions are the base of any JIIB or both CIB exam nowadays. Okay, so let's start. Okay, let's move on. We'll be covering the objective questions. So first one, bank aims to keep a product more at a dash stage of the PLC product life cycle so as to maximize the business and the profit. What is this? Okay, I'll give you the simple logic of PLC product life cycle. Look at this. This is your basically graph. Okay, and the product life cycle moves like this. Okay, so this is the introduction phase, this is against time, and this is sales. Okay, sales. So this is introduction, intro. Then this is growth. Okay. Then this one over here is maturity. And last one is decline. This part is decline. Okay, I'll write it over here, decline. Okay, so this is the basic PLC product life cycle. Introduction of the product, growth of the product, maturity of the product, and decline. Okay, so here if you note, see the sales over here are less, lower part. The sales is over here, and in growth phase the sales is going on increasing, and maturity phase the sales is over here at the peak, and this decline the sales is going down over here. Now you tell me, if you are the owner of any company, where will you try to keep the your product of the PLC? Will you try to keep it over here? Okay, I'll give you two options only. These four, there are four options: introduction, growth, maturity, decline. I'll give you only two: growth or maturity. Decline, of course you want. Introduction, of course you want, right? So now the question comes, growth or maturity. In growth, you see there is something advantage. What is that advantage? Sales is going on growing, and at maturity it is at the peak. So what will you try? In the comment section, give me the answer, B or C. B or C. Everyone in the comment section, B or C. Yeah, it is B or C. The answer is C. Many of you have typed B, but the answer is C. Why? Okay, I'll ask you a simple question. See this. Let's say this sales is 100 over here. Okay, and this sales is somewhere, let's say this only. This is going on increasing, but this is what? This will be less than 100. So if I am the owner of any company, I'll try to make my sales at what? I'll try to make my sales over here 100 because I want maximum money. So I'll always try to keep my product at this phase, not here, nowhere, only at the maturity phase, right? Next, which of the following statements regarding the product life cycle is not correct? Not. You want the wrong one now. What are the options? Product life cycle is different for different products. Okay, we'll study one by one. Each product goes through all the stages in the product life cycle, namely introduction, growth, this is growth, maturity, and decline. Some products have death immediately after the introduction. In some cases, the maturity stage may be very short. So which one is not correct? You want not correct now. So let's look at one by one. Product life cycle is different for each and every product. Different products, it is different. Obviously, it is different. Products life cycle for nowadays in this present era of startups, the product life cycle is totally different. Products move very fast. Whereas a PLC for your earlier products like FMCG, okay, FMCG, Hindustan Lever products, that is different. That is slow. So PLC is different for each and every product. That is true. So I'll write it here true. I want false answer. Okay, what do I want? False. Each product goes through all the stages in the PLC. So each product goes through all the stages. Is it so? All the stages. Let's see it later. Some products have death immediately after introduction. Means introduction, growth, maturity, decline, death immediately. So introduction, from introduction, it moves directly to decline or death, you can call it. Okay. Introduction to this growth and maturity is not there. Is it so? This happens. Okay. This happens. Many products have gone to immediately death after introduction. Many products have gone. Okay. Means any example? Type in the comment section. What example do you know about that product which was introduced and it went immediately down? What was that product? Any product you remember? Any? Yes. Immediately it went down. Okay. There were. Okay. So introduction to death. There were many products. In fact, I'll tell you regarding the wallet system. Wallet system was introduced and it didn't grow at all. You'll say Paytm, but Paytm has grown differently. Paytm grew when it directly connected its account to the merchant's account and immediately the credit was shown. Wallet means the money has to be kept in that wallet for some time and then the money is given to that customer. So that's why this wallet product went immediately down. Some of the companies came other than Paytm also, but they were down. In some cases, maturity stage may be very short. Obviously, maturity stage is short in some of the stages, some products. Okay. Some products move like this. The PLC is like this. It will move like this and immediately down. Here, immediately at a single point. Nowadays, in this present age, in the fast age, now the maturity is very short over here. Okay. Now let's look at the B answer. Each product has to grow. So this is also true and this is also true. Now look at this. This is false. Why? Because all the products have to go through all the stages. It's not compulsory. Some products, whenever they are introduced, they immediately go to the maturity phase. Some products go directly to this decline phase. Okay. So this is false. So the answer is B over here. B. Not true is B. Okay. The core products have longer life cycle period. These products include which of the following? So core products, what are the core products? Longer life cycle, they always keep on growing. Savings, cash credit and credit card. Current account, recurring account, add-on life insurance. Savings, current and term deposit and all of the above. What is the correct answer in this? Core product. Now I want a core product from your side. Which one is a core product? Yeah. Which are the core products? Think over it. Everyone answer in the comment section. Yeah. Core product of the banking system are saving, current and FD. These are the core products. Saving, current and FD. These are the core products of any banking system. Okay. They'll always have a long-term growth or long-term life. Okay. They will never have a short life or decline immediately. I can add one more product to this. I can add two products to this. These are all of deposits. I can add two more products. That is CC and term loan. Okay. So these two products can also be added. You will say, sir, then it was there in A also, but A had a credit card. Credit card is not a core product of the bank. Okay. At least now. Future we don't know. Future it may become the core product. Right now it's not there. Okay. So add-on life. Add-on life is not a core product of the bank. So saving, current, term deposit, CC and term loan. You can add these also in the asset on the asset side. Got it? Which of the following was an augmented product earlier, but it is now become a core product? So augmented means what? What are the types of products? What are the types of products? Yeah. Who can type in the comment section? What are the types of products? In the comment section, everyone. Yeah. Type. Yes. First is core products. Core product. Second is augmented product, right? Yeah. Core product. Then second is augmented product. After augmented product, then what? Yes, comment section, everyone. Comment section. We have core. In fact, we have two more in between, but we generally don't talk of it. Okay, I'll give you the sequence only. See, the sequence is like this: core, core. Then afterwards, the core product, it becomes generic. There are two more, means one more in between, but we generally focus on core, augmented, and potential. Then expected. Then next one is augmented. And last one is potential. So these are the 5 levels of products. Okay, potential. So these are the 5 levels of the products. So which of the following was an augmented? Augmented means what? Some very surprising or very interesting product. Means, for example, let me see if any other example is there. ATM card, current account, cash credit. Okay. Okay. First you answer, then I'll give you the answer. Savings bank account, ATM card, current account, and cash credit. It was a surprise earlier, but now it has become a generic product. Correct? It is. Comment section. ATM card. Nowadays we don't call it ATM card, it is debit card now, right? ATM card and debit card, there is a difference. ATM card means there was the card introduced earlier when the private banking came from 95 to 2005. I myself sold ATM cards. ATM card was available for free. Debit card was chargeable. So debit card you can do the shopping. In ATM card you can't do the shopping. But nowadays ATM cards are gone. Nobody issues ATM cards now. It's all debit cards. Okay. So this was an augmented product earlier. Means it was a surprise element for the customers 10-20 years back. Oh, debit card. My God. I can purchase this. I can purchase that. I can shop. Now, what is this debit card? People have stopped using the debit card now, right? There is no debit card being used because of this UPI. So this debit card is on the stage of what? If you look and draw this PLC, so if this debit card is over here, decline. People are not using debit cards now, even for purchase, even your ATMs are without the debit cards nowadays, right? Cardless withdrawals are allowed. So that's why it's on the decline stage. But the answer to this question was, it was a augmented product earlier. Oh, surprise element. But now it has become a core product. This. So that is debit card. The products that are developed from formal products by combining two or more two core products and adding the value to the products is called as. Two products are combined, okay, and then means basically two products are combined. So value is automatically added later. Are called as what? Augmented, derivative, base core products and supplementary products. So what are these known as? Those products are combined from the two products and then something more masala is added to it. Masala you can call it. Okay. So that is known as two core products. Means I'll give you a simple example. Suppose I will give you an FD. FD. So that is a core product. Okay. But if I give you FD OD, so that becomes your augmented, because FD now you can use this as a current account also, means for you daily purposes. So two core products combination. Okay, so that is a basic example of this. Means two core products are added. So that answer for this is what? It is called as augmented product. Augment means what? Combining these two and adding the masala. Okay, so adding value means adding masala. Okay. Type one or two more core products which have been combined. Everyone. Type any two core products which have been combined to form the third one. Any two. I'll give you one more. Savings account nowadays has been combined with the health insurance policies. Health insurance is given free on the savings account. Why? Because of course competition, right? So that is the basic thing. Nowadays, one more I'll give you. Home loans. Whenever you buy the home loans, immediately consumer loan is given to you. You get a home loan and immediately the bank gives the consumer loan. Why? Because it's an augmented. They know you'll buy a new house. You're buying a new house, so you'll definitely need new refrigerator, new television, new something, new that thing. So that's why this is a combination of the two core products. Okay. A savings bank account is offered with the internet banking facility, a mobile banking facility, and a group health or life insurance product. It has become a core product, semi-core, augmented, and semi-augmented. Now this is simple for you. You must be able to answer this. Just now I gave you the meaning of the products. So what is that called as? Two or more products combined. So these two, savings account is combined with what? Internet banking. See this, internet banking is a separate product. Remember this, internet banking, mobile banking, it's a separate product. Insurance product, insurance policy, that's a separate product. So now you are combining these with the savings account. So it has automatically become what? Augmented, isn't it? Augmented. Got it, everyone? This has automatically become the augmented product. Next one. One second. Yeah. Which of the following can be defined as a combination deposit? Now this is again the sort of that only. Combination deposit. CASA deposit means augmented sort. A reinvestment FD. A recurring deposit. A recurring deposit cum fixed deposit. What is all this? Combination. Combination deposit. CASA. Combination means current account and saving account. It's a combination. These two accounts are separate. Although we call it CASA, but CA is separate and SA is separate. You can't combine current account and savings account. Okay. Keep it very simple. Current account is for business, savings account is for personal level. Okay. A reinvestment plan FD. It's again a single FD only. It can be reinvested. Means reinvestment plan means what? At the maturity, what should I do? Once the FD matures, what should I do? Should I reinvest or should I take it to my savings account? So that is a simple FD. It's not a combination. Okay. Recurring deposit, a common recurring deposit. Taking this and then using means every month I'll take it, put it some amount and then I'll make a FD of this. Now recurring cum FD. Now what is this? This is a combination. Combination means what? Any two. Again, we go back to that core product level, means augmented product level. Okay, similar to that only. That's why I've taken this question over here. Similar to that. I won't say the same, but similar. Okay. So combination deposit means what? What is the exact definition of combination deposit? Combination deposit is a deposit product that combines features of more than one deposit products. Features of more than one deposit. Then you'll say, what is this? Here it's like this. Recurring cum FD means what? See here. Here I'll go on depositing. Recurring means what? Here I'll go on depositing for let's say 11 months. Simple, I'll keep it. And on maturity, I'll get the full amount. This full amount is transferred to my savings account, right? On maturity, along with the interest. So that is simple recurring. But what is recurring cum FD? Recurring cum FD means on maturity, this amount won't be transferred to my savings account. This amount will be made as a FD for future 1 year, 2 year, whatever that years are. Okay, so this is added. This is combined and added to this recurring deposit. This is known as recurring deposit cum FD. Otherwise, normal recurring, what happens? This maturity comes. This amount is transferred to savings account. But here, it is continued as an FD at whatever rate is applicable at that time. So this is known as a combination deposit, recurring deposit cum FD. Which of the following group of deposits? Now you read this, let me check by the time. Which of the following group of deposits bring the overall cost of the funds down? Cost of the funds down. Very important part in banking nowadays. Cost of funding. Saving and recurring. FDR and current and savings, CASA, current saving and FD. Who brings the cost of funds down? Very, very, very basic and important question. You at a JIB level should know what is meant by cost of funds. Cost of funds means at what cost do I borrow? Here, what is my job? I'm in the bank. So what do I do? I'm in this bank, right? Bank. So what do I do over here? I get the deposit from here, deposit, deposit, or we call it liability, right? Deposit, and I give the loans over here, loan, right? So if loan is given at, let's say, 9%, deposit is taken at, let's say, 7%. So what should be my aim in life? My aim in life or in the banking? My aim in banking should be, I can't increase these rates. So that, because what happens, the competition will kill me then. If I make this 9 to 10, okay, I should definitely try to make it 9 to 10, but I can't do it. So what is the main job of remaining in my hand? The main job is bringing this down. If I'm able to bring this down from 7% to, let's say, 5%, then what happens? The difference between these two, earlier it was, this is called as NII, 9 minus 7, 2% was my NII, right? NII, net interest income, or spread we call it, spread. NII or spread we call it, spread. So this earlier it was 2%, now 9 minus 5, it is 4%. So I'm earning more. So which will bring it down? This bringing down will happen with comment section. Yes, of course, current account and savings account, because current account I am giving 0 rate, right, and savings account at lowest at 3.5. So this is your right answer. FD can't be the answer, because FD gives you a higher rate of, gets a higher rate of interest. Recurring is similar to FD. What is the difference between recurring and FD? No difference. Recurring is a step-by-step FD, right? Because you give the same rate of FD for the recurring deposit also, isn't it? Okay, move on. Banks obtain documents and information while opening the deposit account with a view to, means, why do we get the documents? That bring your Aadhaar card, bring your PAN card, bring this, bring that. Nowadays it's not there. Nowadays everything is thumb, right? eKYC, everything is. But then also, let's say eKYC. Why do you obtain eKYC? Either you get the documents physical or you get the eKYC. Why do you get this? Check the activities of the customer, verify the identity of the customer, check illegal transactions, check large money transactions. What do you think? What do you think over here? What should be the answer? Yeah? Do you check the activities of the customer? Activities means, where does this customer go? What does he do in the full day? Whom does he meet? He or she meets? No, right? You can't check the activities of that customer. Identity, yes, I can say that, because identity, whether you are the same person. Now identity here means I can check the address also. Okay. Illegal transactions. How can I check the illegal transactions? Now it's possible. See this. Nowadays the online transactions are so strong. Social media or the online net is so strong now that I can check somehow or the other, means some part I can check. But practically from your exam point of view, the answer is wrong. Why? Because I can't check the transactions of this customer. If new customer comes to me in the branch, I can check whatever he has done earlier. Okay. Check large money transactions. That is also not possible. That we are talking of opening the account. We are not talking of having the account. New account. Okay. So new account, at the time of new account, you won't be knowing what this customer is, how many transactions this customer will be doing, whatever will be the large currency amounts. Okay. So the answer is, verify the identity of the customer. That is the right answer. Okay. Got it, everyone? Which of the following documents are required by the banks to open bank accounts for the purpose of identity and proof of address? So which documents are required by the banks to open bank accounts for the purpose of identity and proof of address? So both, we are talking of both. Okay, identity also and proof of address also, we are talking of both. So ration card, voter ID card, Aadhaar card, and all of the above. What do you think? Ration, voter ID, Aadhaar, and all of the above. You think yourself. In the bank, what do you do while opening the account? You think yourself. What do you do while opening the account? It is all of the above. Correct? It is all of the above. We take all the documents. Ration card also. See here, we don't ask for all the documents. Either of these. Ration card is okay. If you don't have a ration card, then do you have the Aadhaar card? If you don't, this Aadhaar card. If you don't have a Aadhaar card, do you have voter ID card? So this is what we check. Every customer nowadays doesn't have a ration card, right? So we can get either of these only as such. So the answer is all of the above. Hi friends, welcome to Adda 24/7. We are in the Achiever series for RBWM. Here we are covering the important theory, numericals and objective questions. So follow the series till the end because this is very useful for you from the exam point of view. Let's start without wasting the time. Which of the following, you read this, which of the following is true with regards to KYC form? So which of them is true with regards to KYC form? Now what is KYC form? KYC form is taken when we take a new customer on board, right? When we open the account of a new customer. So generally at that time we do take. Even in between it's allowed now because it's not that one customer who is 10 years old. He had given the KYC, he or she had given the KYC while opening the account 10 years back. After 10 years, no KYC, that's not allowed. So now we have classified the customers as per the low risk, high risk, medium risk customers, right? And accordingly, we do take the KYC forms. So which of the following is true with regards to the KYC forms? A. It is statutory requirement for opening of the bank account. B. It is obtained with a view to know the customer and his background. The information also serves the purpose for cross-selling of other products to the customers and all of the above. So what is true? Now we want what is true. So what is this KYC part? Main part is compliance. Compliance part is okay. Means what is the use of KYC form? First is compliance. As per RBI's directives, you have to follow the compliance part, right? So that is done. So that's why let's look from the compliance angle. It is statutory requirement for opening of the bank account. So right, statutory means what? Compulsory requirement. It is obtained with a view to know the customer and its background. So again, this is the compliance part. Background means we have to check what that customer has done, whether this customer is a terrorist, whether this customer is a fraud person. So that is again the compliance part. So A is okay, B is also okay, and C. The information also serves the purpose for cross-selling of other products to the customer. Now this is what you have to answer. Whether the answer is D over here, whether C can be used for this KYC form can be useful for marketing purpose, whether it can be useful for marketing purpose, that's what you have to think now. And that's what you have to answer. A, B or C. Let me see who can answer it. A, B or C. Means A, B or D. A, B, C or D. D means all of the above. So the answer is D, correct. Here KYC form is used for both the purposes. It's not only compliance, it is used for the marketing purpose also. Okay. Whenever the customer writes he has one car or he or she, when I say he means he or she. He or she has one car, he or she is married, he or she has one or children, own house or rented house. So in that case, you can target that customer for a new home loan. If that customer doesn't have a car, that customer writes the income, that 5 lakhs income yearly, 6 lakhs income yearly. It means what? 6 lakhs means 50,000 a month, right? So definitely you can get a 10,000 EMI from that customer. Okay. So if 10,000 EMI is got, means what? How much loan can be given? What type of loan can be given? That's what the bank thinks. And that's what is the marketing part. That's why KYC form is used for both compliance and marketing. So the answer is D, all of the above. Which of the following information is not the part of KYC form? Not. Which of them is not the part of KYC form? Occupation, nationality, accommodation, conveyance, purpose of opening the account, and none of the above. So which of them is not the part? Now this is what you think. Which of them is not the part? Is it required by the customer to give you that purpose of opening the account? Suppose if I say, no, I don't know, want to give you why this account is opened. I want it for myself. I'm not giving you this reason. So is it allowed? What do you think? Occupation, nationality, yes, that is to be given. Occupation means what is my income, whether I am an Indian person. Accommodation, conveyance means rented house, own house. Conveyance means do I have a car or two-wheeler. Purpose of opening the account. So now these A and B are required. So they are a part. But what about C? Is C the not the part of account opening form? Means is it that I'm not required to give the purpose? What do you think, guys? Answer it A, B, C or D. A, B, C or D. Purpose. This is the only crux. Whether this is required, not the part. This one. Or is it D? None of the above. So this is a hint. Either C or D. So the answer is D. D. None of the above. Everything is a part of the account opening form. I have to give why am I opening this account. Because suppose let's say I open a savings account with you and my plan is to get some business money in that savings account. Means if I give it, if I'm feeling that okay some business money will come, so I'll be putting it in this money. So that's not allowed. Business money is to be kept in the current account. So purpose of opening the account is a compulsory part. So all these are compulsory. I'll write it over here. Compulsory. Oh, I'll write it singly. Compulsory. All these are compulsory in account opening. Okay. So everything is a part of KYC form. But what do we want? We want not. So that's why D. The KYC form information enables the bank to A. Biographical, B. Professional, C. Social, D. Credit profile of the customer. Means these KYC forms can be used for what? Biographical. Professional means what is the profession of that customer. Social means what is the family status, what is the income status, what is the house, whether it's rented or owned. Credit profile, how much is the loan taken by that customer earlier. So can we use this KYC form for this? For classifying that customer into these 4-5 categories. A to B all. A to B all means A to B only. A and D only. A to C. A, C and D. I think so it should be A to D all. D it should be. A to D all. Okay. So can I use it for the same? Think over it. Think over it. Yes, 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 yes. What can be the answer? Think over it. Yes. What can be the answer in this? Yeah, it is. Correct. A to D all. Everything. See here. Biographical. Biographical means what? See, what is biographical? Biography. What is the word biography means? Autobiography. Right? So autobiography means what? My whole previous whatever I have done in my life. So biography means the same part. Okay. So biography means whatever I have done in my life up till now. So can I get it from there? Yes, I can get it. Because if I am having a own house, it means I have worked somewhere. That's why I am having that own house. Or my parents might have given me ancestral property. Means anything. I might be from the rich family then. So biographical, professional, whatever I am doing. What is my income level? So that is professional. Social means, as I give you this example, what is my family status? What is my car? Do I have a car? Do I have a own house? Credit profile, earlier loans. Okay, so the answer is D. A to D all. Answer is A. Credit products offered by the banks are traditional credit schemes and market-oriented new credit schemes. Which of the following is a part of traditional credit schemes? Now understand the difference. Traditional credit schemes and market-oriented new credit schemes. What is all this traditional and market-oriented? See, this traditional means general your earlier loans which have been carried out since long ages. Now the names they are given over here. So that's why the question is traditional, old, long ages. I'll give you something about new also later. Cash credit and OD, demand loans and term loans, bill finance, all of the above. So which of them are the traditional products? Which of them? Is bill finance a traditional product? Is this OD or is this bill finance new term recently come in? You might not have heard, right? Many of you in the bank might not have heard about bill finance because many of the banks don't do it. And many branches don't do it. Banks do it. Every bank does it. So which of them is a traditional product? You answer this, traditional. In the meantime, I'll give you the new credit schemes. What are the new credit schemes? New credit schemes means the later due to the IT revolution, whatever has come. What has come due to the IT revolution? Credit cards. Credit cards were never there earlier. So credit cards, right? Then after credit cards, you have new consumer loans, small amount consumer loans, small ticket consumer loans, okay? LAS, loan against security, loan against shares you call it. Simple word LAS, loan against share. Generally it is given for shares. So these are new credit schemes, which were not a part of the traditional credit schemes, okay? But what is the traditional then? What is the answer? Let me see in the comment section. What is the answer? The answer is D, all of the above. Cash credit and OD, it is the old system. Demand loans and term loans, old. Bill finance, old. Means these have been carried out since 1900s or whenever the bank started. What is CCOD? CCOD is a loan which can be repaid anytime. On demand we call it. On demand. Okay, this is known as CCOD. On demand. It can be paid whenever it's required by the bank or even the customer can repay it anytime. In CCOD, we only pay the interest every month. We never pay the EMI. Demand loans and term loans. So demand loan means it's again the same part. Okay, CCOD. Term loan means your home loan. Simple. Home loan, car loan. These are all term loans. Where you pay EMI. EMI. In CCOD, we don't pay the EMI. We pay only interest. We pay only interest over here. Bill finance. Bill finance is also on-demand loan. Demand loan you can call it. Demand. This is similar to CCOD. Okay, this is given for the customers who are having the additional demand for loan. Suppose if Reliance comes to you. So Reliance will be having CC, term loan, even OD and bill finance. Okay, so the answer is all of the above. Got it? Which of the following is not included in the new market oriented retail schemes? Not included, yeah, not included in the new market retail credit schemes. So which of them? Not included. Read the options. Home loans, auto loans, credit card receivables, personal loan, consumer loans, none of the above. Not included. Yeah. Think over it. Think over it. Not included. Not included. Yes. Which of them is not included? Is home loan the part of new retail schemes nowadays? New retail credit schemes means all loans, basically retail loans. Is home loan the part of new retail loans nowadays? Auto loans is a part of that? Yes, it is. Because I'll give you one simple survey. 60% of the bank's incomes nowadays comes from home loans. 60%. Such a huge market this is. Auto loans is also a part of new credit schemes. Remember, credit scheme doesn't mean credit card scheme. Credit card is different. Credit scheme is different. Credit means loans, and credit card is a part of the loan. Okay? So remember, credit means loans. This is a part of the loan. It can be anything. It can be one of them is credit card. Then one of them is home loan. One of them is car loan. Okay, car loan. One of them is that LAS, loan against shares. Everything. You can go on and on. Credit card receivable. So that is also a part of the new loan. Means loans. So that is also a part. Personal loan and consumer loan. That is also a part. So which of them is not included in the new market-oriented credit schemes? That is D. None of the above. All of them are included. Every loan is a part of your new credit scheme nowadays. Only the thing what has happened is home loans were there earlier also. Home loans are there now also. Then what has changed now? The fastness, speed, that has changed. Customer acquisition has changed. Okay. The other products that bank offers to their customers include which of the following remittance services? Now, other products means what? The products which are not the core products of the bank. Means, what is the core product of the bank? Yesterday we saw it. Deposit and loans. These are the core products of the bank. So, what are the other products there? Which are not the deposits or loans. These are like remittances, lockers, okay? Which are not, these are called as ancillary services. So other products that bank offers to the customers include which of the following remittance services? Demand draft, NEFT, RTGS, UPI. Is it A to C all? Is it A and B only? B and C, A and C? Okay, I'll ask you one question. UPI. Is UPI offered by the bank, or is it does the customer come in the branch and then does the UPI? He or she does it from the home. So is bank offering it or your branch offering it? So is the answer only A and B then? Think over it. What is the answer? Think. The answer is yes. A to C all. See here. Everyone understand. Demand draft. That is a payment system. Nowadays it's very less, almost gone, right? Who uses demand draft nowadays? Type in the comment section. How many of you have given the demand draft in last 6 months? And how many demand drafts? One or two is it's okay. Some government officers still ask for those demand drafts. Nowadays nobody asks for the demand drafts, right? So demand draft. NEFT. NEFT is a regular feature. Every day we do give it, isn't it? RTGS we give it. UPI now, UPI is a catch over here. See this. Many of you might think that UPI, this customer doesn't come to the branch. Does the customer come to the branch for UPI? No. But then how can I say UPI is given by my branch or my bank? Because it's on your app. Means it's a part of your total payment systems nowadays. So that's why UPI, although the customer doesn't come to the branch, then also he is using your services. So that's why UPI is a part of the bank's offerings. So he or she, the customer, anyone who's using the UPI is a part of your banking system, your bank remittance system. Okay, so the answer is A to C all. Which of the following is a fee-based service which the banks offer to their customers? Collection of checks, safe deposit lockers, merchant banking services, portfolio management, and home loans. So which of them is a fee-based service? What do you say? Fee-based. Think over it. This is a tricky one. This is a difficult one. Yeah. Fee-based. Now you'll say, sir, fee-based is okay. We understand something that we take commission from that customer in either way. Here, fee-based means what? It can be in any form. I can take a personal direct fees, or I can take some locker rent. Locker rent means what? What is rent? Rent is after all a sort of fee only, isn't it? So Many of you might say that, okay, B is okay, sir. Safe deposit locker, we take the rent and do it. Collection of checks, where do we take the money from that customer? Suppose if I send a check for collection. So do I take the for clearing that money? No, but for outstation checks we do take. But are there outstation checks now? That is also a point. So see here, as per theory, as per your book, collection of checks means outstation checks. So I'll write it over here. Collection of checks, okay, equals to outstation. Outstation checks. But these are very less now. These have become less frequent. Almost, who gives you outstation check today? Tell me, in this CTS age, right? So collection of checks gone. Okay, means after all, that is a part of your this fee-based income. But practically it's not there. But in books, for your JAIIB exam, it is there. Okay. In your JAIIB exam, they still ask you about outstation checks. Why, I don't know. But they ask you. So that's why you have to remember. Safe deposit locker, yes. Merchant banking services. You'll say, sir, what is this merchant banking? I've heard it for the first time. What is merchant banking? I don't know what is merchant banking. What is this? Merchant banking is a part of banking. Remember, banking is of almost 7 types. What we do is just one part, retail banking. Banking is of, I'll give you some names. See this, retail, then trade finance, then agency service. Bank also does the agency service. Okay, commercial banking, universal banking, what do we call them? Wholesale banking. Okay, these are all, and merchant banking is one of them. IPOs. What is merchant banking? IPOs. I'll write it here. Merchant banking over here means IPOs. When your Reliance brings any IPO, right? We go for those shares, buy those shares. So that is a service given by the bank itself. Some part of your bank is giving it. You see the banker's name in those IPO forms. You'll find the name of the banks. Portfolio management, right? Portfolio is a part of wealth management. Serving the customers means, suppose if I'm an HNI, high net worth customer, very huge money, 100 crores in my account, 200 crores in my account. So I'll have to manage that money. I can't manage it on my own. That's why I use the professional services. And home loans. So home loans is also a fee-based income only. We charge fees for that. So that's why the answer is, is it, okay, let me check this home loan. Is home loan a fee-based? I have told home loan, so everybody is typing home loan. Is home loan a fee-based income? Isn't it? Okay, I'll say, okay, let's do one trick over here. I'll say the answer is A to E all. And what do you say? You say it A to E, or do you say A to D? Home loan is not a part of fee-based. Let me check. I'll say answer is A to E all, and you say A to D. Now what do you think? Is the option C or D? Think. Now this is a trick, and this is what we do. Okay, I'll give you some simple logic. Home loans. Don't we charge fees to that customer while opening that home loan? Fees we charge. Then many of you might be feeling, yes sir, processing fees charged. So this is a fee-based income. But the answer is no. The answer is D. A to D all. Home loan is not a fee-based income. The processing fees which we charge to that customer is for processing the hard work which we are doing. What all do we do? Do we do on home loan? Appraisal, visit, then that various other things like valuations, valuation report, getting that valuation report, search and title report. For that our employees required, and that is a processing fee. But that is not a fee-based income. So the answer is A to D all. Answer is not A to E all. It is A to D all. Home loans is not a part of your this fee-based income. Letter of credit and guarantee are credit-based, fund-based offers, fund-based, credit-based, non-fund-based offers, non-credit-based, fund-based offers, and non-credit-based, non-fund-based offers. So firstly, remember, non-credit is out because LC and guarantee are a part of credit, loan. They are a part of loans. Okay, I'll give you a simple difference. Loans are of two types. Okay, one is funded funded, and second is non-funded. Non-funded. Okay. Funded means what? Again two types. Okay. OD means demand. OD you can call it. Chalo, overdraft. Here it comes CC. CC, bill financing, everything. And second is term loan, where you have EMIs. And non-fund based means there are many. There it comes LC, bank guarantee. There are many others. I can give you 5-6 names more. Availization. Then that what do we call them? Uh, this BC, yeah, takeout financing. That is all non-fund based. In fact, there can be many. For JIB level, you always remember the two LCBG. So this LCBG are credit based non-fund offers. Non-fund based. Okay, this is a non-funded loan. What is a non-funded loan? It means whenever I issue an LC, I don't give the actual money out. I don't give the actual money out. It's just a guarantee or the word or letter from my side. Okay. More on this later. Which of the following is not true regarding the letter of credit? Not true. We want not true now regarding the LCs. It is a part of fee-based business. Bank undertakes contingent liability by issue of LC. Bank may be called upon to make the payment in case of crystallization of the liability, and none of the above. Not true. It is a part of fee-based business, so it is true because we do charge fees for the LC. Bank undertakes contingent liabilities. Contingent liability. Okay, contingent means right now I don't have to give the money, but in future I may have to. That is known as contingent, where the actual flow of money is not there right now. Okay, flow of money. Okay, not there right now, but in future it might be. Bank may be called upon to make the payment. So this is what I called a future. Means in future bank may be told to pay us, okay, or to pay that party. So the answer is none of the above. Okay, correct. Let me see how many of you have typed correct D. Yeah. Okay. When a bank earns revenue by selling third-party products like insurance policies, such business is classified as fund-based, banking, para-banking, and marketing activity. So what is that called as? Insurance you sell. What is this insurance business called as? We call it TPP, right? Third-party product. That's what we call it, right? So TPP. But what is the actual word for this? Third party is okay. Third party is one part of something. So this line is called as para-banking. Remember, para-banking means that banking which is not a core product of the bank. It has many names: ancillary services, third-party products, para-banking, all these. Okay. So when the bank earns the revenue by selling the third-party products like insurance policies, here like it means third-party products are many. Write two third-party products which you sell. Two of them. One is insurance. Second one, what do you sell, guys, generally? In the comment section, do type. What do you sell generally? You sell insurance and mutual funds, correct? So that is para-banking. Hi friends, welcome to Adda 24/7. We are in the Achiever series for RBWM, and here we are covering important theory, numericals, and objective questions. Watch the series till the end so that you can gain completely, and watch all the parts of the series. Don't watch just a single show. Okay, so let's start. We'll be solving the objective questions today. To proactively seize the business out of emerging and changing needs of the customers, the bank marketer has to undertake which of the following? Means proactively seize the business out of emerging and changing needs of the customer. Means what? What are the changing needs of the customer? What does the customer require? Okay. So now requirements of the customers are going on changing daily. Means earlier customer used to come to you in the branch for bank statement. Now many of the customers are taking it online. So requirements are changing, right? Earlier customer used to come and do the rounds of the bank for the loans. Today online, everything is online. Earlier customer used to come for the account opening rounds. Now with a thumb on the mobile app. Okay. So the customer needs are changing now with the advent of the technology. So what have we to do? So to proactively seize the business from these changing needs, what is the bank to do? Constantly watch the market, number one. Gauge the changing needs of the customer. Compare the features with the existing products. Examine the scope of developing new products and close down existing schemes. Close down existing schemes. Here, what all it means? All my schemes I'll close down. So is the answer A to D all, or A to C only, B to D only, or A, C and D only? Now look at this. E is not the answer. Okay, E is not given as the answer over here. Many of you, some of you might have thought that close down the schemes and bring the new schemes, but no. What is the meaning of this exact word? Close down the existing schemes means if I am having the savings account, close down the savings account. If I am having the current account, close down the current account. Can it work like this? No. So you cannot have the option E. But remaining things are okay. Constantly watch the market. What is going on in the market? What are the requirements of the customers? How many customers are giving the clearing checks now? How many customers are giving this cash, coming for cash now? Gauge the changing needs of the customer. Means what are the needs? What are the requirements of the customers? Compare the features with the existing products. So features with the existing products. Okay, what are my existing products? What are the requirements of the customers? What are the competitors given in the market? What are they giving? Right? Otherwise, what happens? My competitor is giving the customers platinum debit card, and still I am doing what? No, 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 no. Come to the branch, withdraw through check or cash. No, nothing. I won't give any ATM, nothing. So I'll have to constantly check what is going on in the market. Okay. Examine the scope of developing new products. That is very important. Developing new products, because new products should be developed every now and then, so that they can cater to the customer needs. Closing down the existing sim, that's out. So the answer is A to D all. A to D all. Huh? A to D all. Got it? The new product, see this, you are seeing these numbers 156, 155. These are from the question bank which I share it in the paid classes. So that's why you can join the paid classes. Huh? A new product development undergoes various stages which include. So new product development. Whenever I develop a new product, what are the stages? Idea generation, concept testing, idea screening, business and market analysis, product development, test marketing and commercialization, and advertisement and publicity. Now these are the stages. Okay, these are the stages, right, in the product development. But are these stages in the same sequence? Idea generation, concept testing, idea screening. Okay, are they in the same sequence? What do you think? Should idea generation come first, or should idea generation come last? What do you think should be the answer? Correct. The sequence is also right over here. See this: idea generation first, then concept testing, then idea screening, then business and market analysis, product development, test marketing, commercialization, and advertisement. So this sequence is to be followed. So are all the steps required in this, in product development? A, C and D only, B, D and E only, A to D only, and A to E only. So A to E all. In fact, it should be A to F. Okay. E, product, F should be the answer. F, because even advertisement is a part of this only. Okay. So a new product development, commercialization. Okay, no, that's right. E only. A to E. So F cannot be over here. Okay, F is a different part. Commercialization is totally different aspect. It can't be the part of your product development. Okay, so it is A to E all. That is the answer. A to E all. Okay. Which of the following is a correct order of development stages for a product development? So correct order now. Now just now I gave you this logic. Let's see this. Idea generation, concept testing, idea screening, business and market analysis, product development, test marketing and commercialization. This is one sequence. Second, see here, everywhere idea generation is first. Second is concept testing over here, idea screening over here, idea screening, concept testing. Now this is what this will make the difference. Okay. What will make the difference? Let's see this. Yeah. Think over it. Everyone read, go through it. Go through it, everyone. Idea generation, then concept testing, then idea screening. See here, concept testing is done before idea screening or after idea screening. So always remember, first idea is screened. Suppose if I tell you that, see, I want to bring in a new product which will give the loans to all those who are not having any income, zero income. I'll bring the new loans to the beggars, new loans for the beggars. Let's say I'll bring loans for the beggars. So this is the idea. Of course, it's a stupid idea, but then also it's an idea. That has to be screened first. Screen means what? I'll have to check whether the beggars will repay my loan or not. Again, so idea screening. Then first idea is screened, then the concept is tested. So A is out. Now the answer can be either B or it can be C, because both of them are having the same idea screening second, concept testing third. Then business and market analysis and product development. So first product development or test and marketing and business and market analysis. So here in C what happens, business and market analysis is done at the last. First I am doing commercialization. Is it so? First I will bring it in the market and then do the analysis. No. The answer is B, because this is the right sequence. Idea generation, idea screening, concept testing, business and market analysis, product development, test marketing, and then commercialization. This is the sequence to be followed. Okay? Got it, everyone? New product is generated from market research based on the customer expectations, in-house ideas of the employees associated with the product, suggestions solicited from staff members under the employee suggestion scheme, and all of the above. So what do you do while developing a new product? Yeah. What do you do while developing the new product? Do you do the market research? And means you find out what does the customer require. Of course you have to do it. Then in-house ideas of the employees associated with the product, means those who are in the product development, they can also give you much better ideas, because whenever you are in some project, you think in that direction, and because of that you get various ideas what all enhancements you can do. Suggestions from the staff members, that is also right thing, because staff members are the ones who daily interact with the customers. So that's why the answer should be, what should be the answer, everyone? What should be the answer over here? Correct, all of the above. See here, many a times what happens in banks, suggestions from the staff members are not taken. Suggestions from the staff members not taken. This is very risky, because staff member is a person who directly interacts with the clients. Means you yourself, you all are on the desk. You face generally per day around 100 clients. If you are in cash, you will face more clients. If you are in normal other transactions, you will face at least 50 clients per day. Even if you face 50 clients per day, you will get various ideas from those clients. Can a manager sitting behind in the cabin, will the manager be able to give the right perspective about the customer, or you will be able to give the right perspective? So generally the front staff who's facing the customer will give you the right perspective about the customers. Okay. So suggestions from the staff members under the employee suggestion scheme. That is also an important part. Every bank should have this employee suggestion scheme. There are various boxes kept in the branches. Boxes, suggestion boxes. Now these suggestion boxes are generally for the customers, but it should have a staff suggestion box also. This is a Japanese technique. They call it Kaizen. Means in that you go on suggesting and go on developing that product. Okay. So the answer is D. Got it? All of the above. In a product development process, during the idea screening, following approaches is followed. Idea screening means this is second stage. Idea generation and then idea screening. What should be done? Whether there is any need for a new product. Is it an improvement over the existing product? Can the existing infrastructure handle the new product? And all of the above. Very good option. Okay. Means very important point in idea screening. Means here, whether there is a need for any new product. That's a basic question. Why should I spend my money and energy in developing a new product if my existing product is serving me better and serving the clients better? Is there any new need? No. If it's no need, then immediately it's out. And if it is required, then I'll have to develop that product. Is it an improvement over the existing product? That is also the point. Means if I'm giving a debit card, platinum debit card to a customer, so what is that? That is an improvement on my savings account, right? If I'm giving the UPI facility, what is that? That is an improvement on my savings account, saving current anything. Can the existing infrastructure handle the new product? If and whether I'm having that much IT backup, do I have that much IT backup? So that's what I'll have to check. So all of the above is the answer over here. All of them are to be checked. Whenever we do the idea screening, we have to check all these three parameters. In fact, not only these three, there are many others. But in the options here are three, so that will follow now. In the product development, which of the following statement is not correct in context of the business analysis and market analysis? So not correct in context of business analysis and market analysis. Which of them is not correct? Huh? So decision is taken whether the product is viable from financial and marketing aspects. Analyze the expected increase in the business and profit. Cost benefit analysis of the product from the bankers and customers point of view, and none of the above. So which of the following statement is not correct? We want the not correct one. Huh? Whether the product is viable from the business and financial perspectives. So business and financial and marketing perspectives. So business analysis. Okay, business means whether it's related to money. Analyze the expected increase in the business and profit. Cost benefit analysis of the product from the bankers and customers viewpoint, and none of the above. We want not correct. What is the answer? Yes. Answer is everyone. What is the answer? Think again. Which one of them is not correct? Product is viable or not? Can I get the expected business or revenue from this? Is this product beneficial to the customer and the banker? Both of them. And none of the above. So the answer is none of the above. Correct. The answer is none of the above. Okay. The answer is none of the above. Means all of them are important. All of them. So all of them are correct and important. Okay. Whether this product is viable. Viable means what? Whether this product is doable. Okay. It can be done through my existing systems. Expected increase in the business, right? And profits. And cost benefit analysis from the bankers and the customer's point of view. All of them are required. Okay. Which of the following is a constraint in developing in the new product development? Now we want a constraint. Constraint means limitation. What is the constraint? Limitation. Limitation means which stops me. Okay. Which of the following is a constraint? Heterogeneity of customer base in different branches. Product obsolescence and existing product range. Resistance from the staff towards new product as it may increase the workload, and all of the above. Think over it. You think yourself, you keep yourself in the shoes. Whenever any new product comes, what happens? What is the first reaction? Oh my God, new work, new job. एक और आ गया, right? So this is obviously there. C1, resistance from staff. Second, heterogeneity of customer database base means what? Some customers are minor children, some of them are senior citizens, some of them are working, some of them are non-working, some of them are jobless. So this heterogeneity means variety of customers. Product obsolescence. What is obsolescence? If I bring the product today, in next 6 months, if it is going to get obsolete, obsolete means what? Out of use. Then what's the use? Give me one example of any product which has become obsolete now. Obsolete. Almost obsolete in banking space, which is hardly used nowadays. Shall I give you 2, 3? See this. First one I'll give you. Who can give me the first one? Yeah. First one is DD. Are you using DDs now? Very few. Some of them require it right now. DD is gone, right? Second one. Now others are to go. There are traveler checks also. These are also gone almost. TCs in Forex. Others to go are which will be going in future. In coming future only. One is clearing. Clearing will not exist in future. Because why? Because everyone, what is clearing? Transfer of money from one person to another or one bank to another. It can be done through UPI, NEFT, RTGS. So that will go now. Debit cards will go now. They won't be required at all. Right? Debit cards. Why? Because what is the use of debit card? For cash. And for that cash and other things, what? Purchasing. So all of them I can do it through UPI now or online app also. Now there is cashless withdrawal in the ATMs, right? So these are all obsolete products. These are the existing obsolete and these are going to become obsolete. Okay. So the answer is D, all of them. Okay. Product obsolescence is one of the important parameters. D, all of them. Okay. So this is your right answer. According to Theodore Levitt, the product evolved on the following lines: generic product, expected product, augmented product, and potential product. So these are the types of products. What are the types of products? Generic, yeah, generic, expected, augmented, and potential product. So what are the types of products? Yesterday's lecture I took it, I think so, yeah. Types of products. Okay. So what are the types of products? Type in the comment section. Yeah. Yeah. Everyone. In the comment section. Type in the comment section. Yes. What are the types of products? Generic. Are there? Yeah. Okay, I'll show you. Okay, let me show you over here only. See this. Are you able to see this now? These are the 5 levels of products: core product, generic product, expected product, augmented product, and potential product. So these are the 5 levels of the products. Okay, core product, generic product, expected product, augmented product, and potential product. So these 4 come within these 5. Okay, so the answer is, what is the answer? A to D all. See here, we are giving the details of these in the paid classes. What is the core product? I'll give you a simple example. Let's suppose if I am having a toothpaste, I'm selling a toothpaste. If I give you that toothpaste in a box, okay, complete box, 1 kg toothpaste, take it home. Or I am a shopkeeper, I am keeping that toothpaste with me. Whenever you want a toothpaste, I'll just, okay, you want toothpaste, take this 1 mugga of toothpaste. 1 mugga, we call it na, mugga in Hindi. 1 mugga of toothpaste, take this for 20 rupees. Will you take it? Or if I give you that, okay, how many of you purchase the cooking oil? Everyone. How many of you purchase the cooking oil which is packed? Dhara, then what? Saffola, all those. And how many of you purchase it from that Ghani? Ghani means that local person. Right? Majority of us are now purchasing from those packed products. Right? Some of us are purchasing from that Ghani. But many of us are purchasing this packed. Why? Because of this color, the attractiveness of the packaging. So these all are under this generic, expected, augmented product. These are augmented products. Okay, got it? Chalo. Next one. The unbranded and undifferentiated products are called generic products, expected products, augmented and potential products. So unbranded, which are the unbranded products? These are called as which we sell in the markets, right? Which we go in any mela, we see something, or even that what we eat, shengdana, right? Khari shengdane. What are those? Unbranded, right? So what are those? These are all generic products. Okay, generic means these are generic medicines also we have, right? OTC or generic medicine. So these are basically used every now and then everywhere, right? So generic products are unbranded. Nowadays we have that best example is that medicine shops. Now we have those branded medicines and generic medicines, those green shops. So these are generic products. They don't have a brand name. Same thing is true for everything. Means all the other products also. Suppose if you go purchase some cooking oil from some local Ghani, there is no brand name to this. Okay. Got it? So these are called as generic products. Hi friends, welcome to Adda 24/7. We are in the Achiever series for RBWM. Here we are covering the important theory, numericals, objective questions, case studies, all of them. So follow it completely. Let's start. First, let's start with the objective questions. Okay. The product that represents the minimum conditions of a customer for purchase is a minimum conditions of a customer, means the customer is requiring the minimum conditions over here, is known as a generic, expected, augmented and potential product. Think over it. What do you think should be the answer? Minimum conditions of the customer. Minimum conditions of the customer. What do you think should be the answer? This is a part of your product development. Various types of products are there. Okay. Out of them, one question comes over here. Okay. So a product that represents minimum condition. Okay. Minimum conditions is known as generic or expected. Generic or expected. Some of you think it is generic product, right? Generic means common product. It is common for all. Generic means what? It is a common product, common for all. What are the various types of products? Who can tell me? Various types of products. Yeah, who can tell me? Type in the comment section. Yeah. Various types of products. Type first. Generic product, augmented product, various. These are the various types, right? In fact, there are 5 types of products. 5 types. Do you know which one? What are the 5 types of products? Okay, let's see this. Okay, let me show you this. Five types of all the five I'll show you. First is generic. One sec. First is generic product. Second is augmented, right? Say this. First is generic product, core product, then generic, then expected, then augmented, and then potential. So these are the five types of products. Core, generic, expected, augmented, and then potential. So what is the answer for this? Minimum conditions of a customer. Minimum customer condition means minimum conditions by which the customer will purchase the product. That is expected. Whenever we have this expected product, we always put the minimum condition, bare minimum. If I satisfy those, there are high chances that the customers will purchase. So the answer is expected product. Okay. A bank offering savings bank scheme with free passbook updation and checkbook facility, which the customers expect from the bank. This is an example of. So bank is offering savings bank with free passbook updation. Now let's say something else we'll call it. Free passbook updation and checkbook facility. Checkbook facility is a generic product now. So if I tell you UPI, okay, somewhat like this, or you can consider this also. In some banks still it is going on. A bank offers savings bank scheme with a free passbook updation and a checkbook facility which the customer expect from the bank. So when the customer is expecting from the bank and the bank is offering this scheme, so it is generic, expected, augmented, or potential. It was expected by the customer. So name itself it says expect from the bank. So the answer is B, expected product. This is an example of expected product. Okay. So whatever customer expects, if you give it, then it's a expected product. Okay. Got it? Next one. When a bank comes out with a product that is enriched voluntarily to offer better value to the customer, like offering debit card or ATM card with a savings bank account, such product is categorized as. Means voluntarily, bank comes out with the product voluntarily, means on its own. Nobody is demanding it from the bank, but bank is coming out on its own to give a better value to the customer. What do we mean by better value? Better value means whatever the customer expects, we should give more than that. Suppose if the customer expects only a savings bank account with a checkbook, and if I give him a debit card, then it's better value. Offering debit card or ATM card with a savings bank account, such product is categorized as. What is the answer for this? No. This product will be categorized as what? Means I am giving more to the customer. More. So whenever I am giving more to the customer, it comes under which category? See this, generic, then expected. After expected comes expected, means this all customer knows. Customer feels that okay, if you give this, that's okay. You are not doing something different. I am expecting this from the bank and you are giving it. But here the case is voluntarily extra, it is giving extra. So whenever a bank gives extra, it comes under augmented product. Okay, augmented. Remember this. See here, the earlier question was, this was customer expecting it. If the customer wants a checkbook, the customer wants a passbook updation, so that's what you are giving. So that's expected. But in this case, the customer is not expecting anything. You are giving on your own. So that is known as augmented product. Offering doorstep banking facility to the customer is an example of generic, expected, augmented, and potential product. So doorstep banking is an example of. Yes, what do you think? Think of it. Let me see who can answer it. Who can answer this? Doorstep banking. It is potential product. Here, as per your book, it is potential product. Okay. Nowadays, even this comes under augmented only, because nowadays every bank is giving a doorstep banking. So this is, as per your book, it is a potential product. Okay. In a product management, product policy is a main task. Now, what is product policy? Product policy, okay, let's see this further. The product policy takes into account the following concepts. So what are the important points of your product policy? Appraisal of product line and individual product. B. Decision on different product differentiation. C. Product positioning. D. Brand decision. And E. Decisions on packing. So read this carefully again. Okay. So in a product management, the product policy is a main task. So product policy means what? Designing the product policy. Who will design it? It will be designed by the top level management. Okay. The product, so what does this product policy take into account? It takes into account appraisal of the product line and the individual product. Product line means what? Suppose if I'm doing the job of, let's say I'm in construction business. So my product line will be what? My product line will be construction of the buildings plus some interior decoration plus some architectural part. So that all becomes my product line. Can I sell washing soda or washing soap if I'm in the construction line? Because that is not my product line. So individual products and product line. Okay, first one. Second, decisions on product differentiation. What do you mean by differentiation? How can I differentiate my product from the others, from the competitors? Means what? Now again, I'll give you some example of banking only. How do you differentiate the products in the banking? Or savings account are same for all the banks. Saving is a saving account, current is a current account. How do you differentiate? You differentiate by giving some augmented services, additional services. What are the additional services? Means if some other banks are giving checkbook facility and a debit card, okay, you will give a platinum debit card. Plus you might offer a OD also on that account, OD. So that is a additional feature. So that is differentiation. You might offer an insurance policy along free with the savings account on a minimum balance of, let's say, 50,000. Okay. Product positioning. How do I position my product? Positioning means what? How do I create the brand image of my product? Okay. Brand decision, similar ones. And decision on packing. Packing is very important nowadays. Now we will say, sir, packing is okay in the FMCG product. Kurkure, Lays, we do purchase on the basis of packing only. Attractive packing we purchase. But what is it there in banking? How do you package this in banking? Packaging in banking means giving the terms and conditions. Okay. It should be made very easy to deal with. So what is the answer in this? Product, this policy will include which points? All the A to E. Let's see. A, C and D only. B, D and E only. A to D only. A to E all. So what should be the answer to this? A to E all or A to D? What do you think? A to D or A to E all? Comment section. Yes, it is A to E all. All of them form the part of the product policy. Remember this. All of them form the part of the product policy. In product policy, I'll have to look at the product line and the individual product also. I'll have to look at the differentiation also. I'll have to look at the positioning also. I'll have to look at the brand decisions and packaging. All of them I'll have to look at it. Okay. Which of the following is not a threat to the existence of the product? Not a threat. Okay, not a threat. So threat we all know. Means basically if you know the threat, you will be able to answer on the not a threat, right? So which is a threat and which is a not a threat to the existence of the products? Products means, suppose if I am having my savings bank account. So existence of product means that product should run. So change in environment, change in customer preference, competition in the business, and none of the above. So which of them is not the threat? Think of which of them is a threat. Let's see. First, let's look at which of them is a threat. So wherever it's a threat, I'll write T, and wherever it's not a threat, I'll write NT. Okay. So change in environment means what? Suppose if I'm having the savings bank account and I'm not giving the debit card, no UPI, I am giving only checkbook, come in the branch, withdraw, and then go out. So is this change in environment and is it hampering my business? Yes, of course it is hampering. So change in environment, right? So that is a threat to this. So I'll write a T over here. This is not the right answer actually. We want not a threat. So this is T, threat. Change in the customer preference means what? What does the customer want now? Earlier, debit card was a privilege. Oh, debit card, platinum debit card. Now, debit card is a common thing. People don't even use debit card nowadays, right? Because all of them are using UPI. So customer preferences. So is this a threat? Yes, it's a threat. Competition in the business means if you bring a savings bank account or if you bring a loan account today, immediately in 1 month it is copied by others and more features are added to it. And your product becomes old, obsolete. So that is also a threat. So which of them is not a threat then? This is not, none of the above is the answer because all of them are threats. So the answer is D, none of the above. Okay, got it? Everyone got it clear? Type yes in the comment section if you have understood it. Everyone, if you have understood it, type yes in the comment section. Yeah? Okay, move on. Unique selling point or unique selling proposition, we call it USP. This word is generally called as USP, unique selling proposition or point, is used by the marketers for. Now, what is USP basically? What is USP? Suppose if I ask you, which phone would you prefer if you have money? Which phone would you prefer if you have money? Lot of money if you are having. You'll prefer this Android phone or will you prefer Apple phone? If you all have money, huge money you are having. So many of you will type in the comment section, what will you prefer? Correct. Many of us are saying that Android and this Apple, right? Why Apple? Because USP. What is the USP of Apple? Apple is a prestige point today, as up till now. Okay, means good Apple phones. These are the prestige points. Or, for example, if you have a lot of money in the bank, which car will you buy? Normal car or Mercedes Benz? Of course, Mercedes Benz, right? Because this is a USP. What is a USP? USP of any product is that product which is kept in the minds of the people and you can't replace it. Okay, so USP is used for what? Selling a product, product differentiation, bringing a new product, and all of the above. Why is USP used? Yeah, selling a product, bringing a new product, all of the above. Let's see what is the answer in the comment section. Let me see everyone. All of you are typing all of the above, and this is not the answer. Okay, USP is used for product differentiation. Product differentiation only it is used. Okay, what is product differentiation? I told you earlier, how do I differentiate my product? How do I keep my product separate in the minds of the customer? Okay, means what? Whenever a customer comes to my bank, okay, that customer should get such a service that the customer should keep your bank in a different mind location altogether. Okay, he must have affinity towards your bank. So that's known as product differentiation. How do you differentiate your product from that of the others? Okay, differentiate your products. What is the example for this? Just now I gave you 2-3 examples of banking giving the debit cards or this UPI systems or something like this. Similarly, that Mercedes Benz. These are all the product differentiation techniques. Okay. How do you differentiate a debit card among various banks. The differentiation point is cash withdrawal limit, purchasing power limit, right? All these are the differentiating points. So that is known as USP. USP is used for product differentiation. For positioning a product, the most important factor is positioning. Means what? Positioning means creating your brand image in the minds of the customer. Creating a brand image. Positioning means creating a brand image. Okay, that is positioning. Creating a brand image means, for example, I'll tell you simple example. This what soaps, toilet soaps or the bathroom soaps which we use for bathing. If I tell Dove and if I tell simple other one, any simple, what? Santoor. Dove and Santoor. So what is the positioning in your mind? Dove is for rich class, classy people. Those who use Dove, okay, they'll feel that they are a bit richer. Santoor is for common persons, right? So positioning means this is a brand image creation. So the most important factor is in positioning, unique selling proposition of the product, advertisement and publicity, mind of the customer, and all of the above. So most important factor is what? Most important factor. Think over it. Most important factor. Is it a unique selling point or advertisement or mind of the customer? Let me see how many of you can answer this. Comment section. Many of you are typing this unique selling point because you have seen this word earlier. The answer is not USP. The answer over here is mind of the customer. For positioning, the mind of the customer is very important. You must understand the minds of the customer. What does the customer think? Okay, understanding the customer mindset is very important from the positioning point of view. Okay, understanding the customer's mindset, very important one. Okay. Product branding is an important aspect in the bank marketing. Which of the following statements in this connection is not correct? Look at this. It's not correct. You want not correct with respect to product branding. You want not correct. Binding is a, sorry, not binding, it is branding. Branding is a powerful tool for relationship building. Not correct you want, huh? This is true. Branding effort begins at a branch level. This is doubtful. Branding exercise begins by giving the product some catchy and attractive name, and none of the above. So now the fight is between B and C. Okay? The fight is between B and C. So what do you think? B or C? Branding efforts begin at the branch level. Is the branding done at the branch level? No, that is not correct. So this is false. So this is the answer I want. I want not correct. Not correct. Okay. So here I am getting this answer not correct. Okay. Got it everyone? See this very important point. C1 is also doubtful. Branding exercise begins by giving the product some catchy and attractive name. Of course, look at this. Here the point is, this is the first attracting point for doing the branding. But this is not all. Just giving the catchy names or attractive names won't work if your product does not have the value creation. Okay. Suppose if I tell you the most discounted offer, if I say the most discounted offer means I'll tell you most discounted, you can't get this discount anywhere. Most discounted offer. So catchy name. But if there is a shop near me who's giving better discounts than me, then is my offer a most discounted offer? So the point over here is catchy name is the first step, but afterwards, after the catchy name, the important part is you must deliver the value also, right? Retail banking is exposed to what type of risk out of the following? So retail banking, retail means whatever we are doing: credit risk, business risk, market risk, operations risk, and reputation risk. So retail banking is exposed to what type of risks? Credit risk. Credit means what? Now this is a new term to you. Credit means what? Counterparty risk. Or if I give you the loan, will you repay back the loan? That is a credit risk. If you don't repay, then that's a credit risk. Business risk means long-term business perspective. Whether will I sustain in the long-term business? Market risk, right? Market risk means some factors which are not in your hands. For example, like Russia-Ukraine war, that will also affect the banking. Okay. Operations risk, your human error, your system's failure. And reputation risk. Reputation means something bad comes out about your bank in the newspapers. So which of them? The answer is B. A to E, all. All of them is the answer. Retail banking is subject to all these exposures, okay, and all these risks. Now before going, join this AIM batch coming up on 26th February. All the numericals, objective questions, case studies covered, all the subjects covered. You can join the Mahapack 2.0 also. In Mahapack you get multiple batches per subject. Okay, let me show you how to join the Mahapack. Let's go to Adda 24/7. I'll always suggest you to go through the app. Okay, always go through the app only, because in the app you get 1% extra. Okay, why 1% extra? Because there is a coin system in the app. Okay, so coin system means you go on collecting the coins, you go on purchasing and you go on collecting the coins. So that will give you additional benefit of around 1%. Okay, so go to Adda 24/7, say this. Here you are on Adda 24/7. Go to JAIIB and CIB. First page itself. Say this. Click on JAIIB May 24. Okay. Clicked. Now look at the batches. See this AIM batch. AIM. Click on this AIM batch. You go through it. Ebooks are available. Test series are available. Online live classes. Expert faculties. Interactive classes. Recorded videos. Limited size batches. Everything is available. Use the code Y432 for maximum discounts. Y432. Now look at this. Here you are getting 75% off. Apply this code and then you are getting 77% off. Plus if you use the app, you will be getting 1% extra. So 78%. Okay. Similarly, you can join the Mahapack as well. In Mahapack you get, say this. In Mahapack you get multiple batches. You can join the JAIIB CIB combined Mahapack. Okay, or JAIIB Mahapack 2.0, any one of them. If you join JAIIB CIB combined Mahapack, what you get is, you get the same for JAIIB as well as CIB also. Use the code Y432 again over here, Y432 for maximum discounts. Okay, click on apply. See this, 77% off plus 1% in the app. Again you get ebooks over here, tests over here. Okay, ebooks, tests, online classes, regular tests, 24/7 recording, experienced faculty, interactive classes. Okay, so everything you are getting. Join fast. Okay, bye.